Hi, this is Lucid Totality. I'm Leah Wald, and I'm here with Tyler Jenks. And today we're going to talk about Tyler's tweet and the fact that the 11,100 line has been broken, and that we're now starting a descent that may take us down to $7,000 or more. And then State of the Union is tonight at 9 p.m. Eastern Standard Time. So we're going to discuss that a bit, specifically foreign policy, trade policy, growth of the economics, stock market, interest rates, all that good stuff, and obviously how that affects us within the crypto world, within specifically Bitcoin, as well as how Tyler's thinking and looking at everything from a money management perspective. And lastly, the price of Bitcoin with some new analysis technical tools that we haven't showed you yet. And then finally ending on Hyperwave. So we'll make it nice, short, and sweet, and hopefully a lot of fun. Tyler?
Great, thank you, Leah. This is a very important day, I believe, because we have broken down this morning, and we've broken below the 11,100 line that we've talked about in the last 3 or 4 vlogs. Very, very important. Too early to tell exactly what it means, but we're going to go into a lot of detail at the end of the vlog about what the price is actually doing and what we believe the immediate future holds for not only Bitcoin, but all cryptocurrencies. Leah mentioned the tweet we sent out this morning as that line was breaking. Leah, do you happen to have that tweet?
Yep, I'm going to pull it up now.
Okay.
It's up.
Great. Very simply, what I said was that the price of Bitcoin is once again deteriorating. Be patient. A buying opportunity is coming, but from much lower levels. So that's a pretty broad statement, but I believe I can back that up, and that's what we're going to do at the end of this vlog. So right now what we're going to do is we're just going to make some observations about the State of the Union address this evening. Usually you don't get much political commentary on these crypto vlogs, but I believe it's very important to keep a very broad macro view of this asset class. You can be sure that you're not going to hear anything from President Trump this evening about cryptocurrencies. It still is not a mainstream topic. We think it is. We think it's very important. And we think that there are 3 or 4 macroeconomic themes that will be talked about this evening. And those are the things I'm going to be listening for in terms of the stock market. You can be sure that President Trump is going to mention that this is one of the greatest first-year stock market results for any president in history, and he will make a lot of hay with that. We will see a lot of the Republican side standing up and cheering, and we'll see a lot of the Democrats sitting sullenly in their seats while he does that. Maybe even some boos coming from that side of the aisle. We will also probably hear about growth. GDP was promised to pick up from 1.5% to close to 3%, and very few people, analysts, economists, experts, thought that that was possible. You will be sure to hear this evening that we've had 3 quarters in a row of between 2.7 and 3% growth. And again, we will have the histrionics in terms of the television camera, people sitting up and sitting down and all of that sort of stuff, but it will be mentioned. And finally, we will probably hear something about interest rates that remained very, very low. All three of those topics are essential for understanding what's going on with cryptocurrencies and Bitcoin. So I think it will be a very interesting talk, regardless of your politics, regardless of what you think about what's going on in Washington, D.C. We must remember that the party in power can do a lot of things to either strengthen or weaken those three big macro elements that I just talked about. Leah, what do you think you're going to be looking for this evening?
I think it's going to be very interesting. I actually had a question for you to start it off with, which is that
Sure.
despite a bit of a fall this morning, stock markets obviously are on fire. So, what do you think that Trump may be speaking to regarding his recent tax code, as well as obviously the recent wave of announcements of bonuses and new jobs from corporate America?
Oh, yeah, that's a great point. I forgot to mention that. In terms of his bringing money back over, he promised to do that. In other words, profits that are held by corporations offshore. There have been estimates of anywhere from $2 to $4 trillion, and we just couldn't seem to come up with a way in the last 10 or 15 years to bring it back. He promised to do that. He did do that. And once again, skeptics at all levels on both sides of the aisle, including economists who lean either to the right or the left, doubted very much that it would have much of an impact. Way too early to tell if it's going to, but certainly the first 30 days after it began, essentially more than anyone, including possibly Donald Trump, thought, in terms of the amount of money coming back and how it's being used in terms of hiring and bonuses and a number of other things. Maybe that's just for the public, but it will be interesting to hear what he says about it.
Yeah.
Good point, Liam.
Also on that, the 10-year Treasury yields rise above 2.7%. Since 2014, it seems as if sent the market into a bit of nervousness. Obviously, the yield recovered a little bit, and gold was higher. Do you want to comment on that, and any thoughts about what if he's going to talk about equity markets?
Right, he will just mention it in passing, I think. But his point is that it's all because of his administration, which, of course, anyone with a modicum of knowledge knows that that is not true. There are so many factors that go into all of those macro elements, not only international but domestic. And he does clearly deserve some credit for what we are seeing. But your point about interest rates is interesting. How can interest rates be going up on the 10-year from a low below 1.5% all the way up to 2.7% in a little over 12 to 18 months without it being a negative for the economy and the stock market? That conclusion is often the knee-jerk reaction by most people that don't study the relationship between interest rates, particularly after a 40-year cycle of declining. Interest rates have been falling for 40 years now, and they've only recently, in the last really 18 months, started to creep up, and they are still creeping up. Until we get up to 5-6% on the 10-year, which we will do at some point in the future, maybe the far future, it is actually very bullish for the stock market and very bullish for the economy. In terms of gold, gold is ticking up slightly. It's made a run from $1,250 up to $1,360 in the last 45 days. But it's still got a long way to go up to its old high 5 years ago at $1,900. We believe it's going to get there, but he just might mention those things tonight.
Yeah. Being here in Washington, D.C., what's definitely going to interest me a bit is, that we may see a reversal in the Republican control in Congress. So I am kind of curious on seeing regarding the rhetoric if it also feels a bit like a campaign speech, given just how much he is going to have to reach across the aisle to Democrats to make sure that his legislative agenda does get that bipartisan support coming into the midterm elections this year. So at least from that perspective, from the politics perspective, I'm going to be interested in that. Regarding foreign policy, I'm very, very curious, obviously, what the game plan is with North Korea, with Iran, with, here in DC, it's talked about every single day. It is obviously elsewhere as well, but that's the heated topics, at least, that I hear in the dog park when I take my dog there every single morning. So, and then lastly, having lived in Israel so much of my life, the recent news about, to move the U.S. Embassy to Jerusalem. I'm curious if he's going to mention that, which I assume he's going to have to at least make note of that because that did cause quite a stir. So from that perspective, I'm very curious. What else about the economy are you going to be looking forward tonight, Tyler?
Well, I think we've covered it pretty well. As everybody can tell, we're very interested in the ancillary but important issues of the day in terms of how they feed into markets. But I think we've covered a lot of it. Great points, Leah, from your perspective, being so close to all of it. I know you've worked for people on the Hill in the past, and you're wired into the thinking and the comments. I would just encourage people, even though you're bored with politics, this is going to be an important year politically, and therefore it is going to affect the economy and investments in general. And I think at some point here, cryptocurrency, I think it's a little too early for that, but we encourage you to listen.
Yep.
So, what's next on the agenda?
The politics of politics. Next on the agenda is Bitcoin markets, and also any specific technical systems that you were going to show us today on how you're analyzing them.
Exactly. I'm going to quickly go over a couple of things for you that we talked about yesterday, having to do with, I'll give you another example of it. The break in prices today in Bitcoin and the other cryptocurrencies is very important when talking about hyperwaves. I'm going to drum this in to everyone's psyches on a daily basis until you understand the perspective that Leah and I are coming from on this. And to do it, what I'm going to do is I am going to screen share once again. We will bring up a chart of Bitcoin. Tell me when you can see that, Leah.
I can see it.
Okay, and what we're going to do immediately is move to this chart that we showed yesterday, which is what I call the archetype, the hyperwave archetype. This is something that I put together 40 years ago. Remember, it's in 7 phases, 7 waves, starting flat, moving up sharper, moving way up very quickly, coming back down, retreating, and then phase 7 is a down wave. And we're going to take a look at a new example of a hyperwave today, Also back in the 1920s, this is Otis Elevator. Otis Elevator, same as the company today, but we're looking at what it was doing back in the 1920s, 1924 through 1935, as the economy heated up during the Roaring '20s and was the precursor to the worst depression that the world has seen. We came close to moving into another situation like that in 2007 and 2008. It did not occur, but what it did do is it launched cryptocurrencies and Bitcoin. We talked about that a little bit. This is Otis Elevator. This is the peak at about $115 after moving up from approximately $5 before this big run-up started in a hyperwave. And then you also see that it ends up coming all the way back down to the beginning in 1932 and 1933. Once again, this is the archetype. This is what a hyperwave looks like. They all look the same. They all move the same. They all result in the same action. There's Otis Elevator again. And with that, what I'm going to do is I'm going to bring up the Bitcoin chart once again. And here it is. We're looking at a 30-minute chart. I'm going to draw the line that we've been talking about at approximately 1,100. If I can. $1,100, and I'm going to go out to a longer time frame so you see again the war that has been taking place above and below that line. If you think of trend lines, particularly horizontal trend lines, a great metaphor for them is a tug of war with 10 hugely strong people on one side wearing green and 10 hugely strong people on the other side wearing red, both pulling on the same rope in different directions. For a long period of time, when they are attempting to pull the flag over the finish line in one direction or the other, you get this kind of action. Back and forth, back and forth, back and forth, because both the supply and the demand, or both the red and the green teams, are fairly equally balanced. And what always happens when you watch a tug of war is finally one side gains a slight advantage over the other side, and then the other side crumbles and usually falls down, and the people pulling on the winning side all fall down because all of that pressure is relieved at once. And that's what we're looking at here. This could have broken above the line it could break below the line. We had a lot of technical reasons why we thought it was going to break below the line. And now let's go to a very short-term chart, and you'll see what happened this morning and why I sent the tweet out. We broke sharply just about 6 hours ago, tried to recover back to that line, and then it all fell apart. Everyone on both sides fell to the ground, and the winner in this case is the bearish side, which are the red candlesticks, and they continue lower. So from 11,100 earlier today, we are now at 10,219 at a low, and just recently in the last 10 minutes have popped back to 10,300. This is capitulation on the part of the bulls. Is it possible that they are going to be able to gain once again the advantage before we drop another $1,000 or $2,000 or $3,000 from here? Yes, of course. Everything having to do with technical analysis and looking at charts is based on the probability or the weight of the evidence. But it's going to get more and more difficult for the other side to stand up and get a hold of the rope again before we're down somewhere below 9,000 or 8,000 or 7,000, which I anticipate to be the final low in this correction that started all the way back at 19,666. And it should occur fairly quickly. But if you are a trader, you are now on the wrong side of this market. If you are a speculator, you should be short. And if you are a hodler, it's not going to matter. You don't really care where the price is going. We did a vlog about that. Both Leah and I disagree in general with that approach, particularly with these volatile markets, with these swings so big. But in any case, what I wanted to do today is talk about a couple of other technical indicators, not just trend lines. At the bottom of the chart, you see the relative strength index, which basically runs between about 20 on the lows and 80 on the highs, and is getting pretty low right now, around 40. This is about as low as it's been in a long time, going all the way back to 5,000 before we ran up to 20,000. Notice back here, the RSIs were at 40. That's about where we're sitting now. But also notice we were at 40 back January 21st, back on January the 14th. So this is not a capitulation low, in my opinion. Now, RSI was designed by a gentleman whose name was Wells Wilder Jr. Wells Wilder Jr. also gave us a thing called the SAR, or stop and reverse point, that I'm going to show you in just a second. Also the directional index, and also the average true range. I studied under Wells Wilder Jr. back in the 1970s and learned a number of his techniques. Let me pull up a tool that is called the stop and reverse point. I haven't seen a lot of people using this with cryptos, but it's a very powerful tool. What you've noticed just happened on this chart, which is a daily chart going all the way back to the end of October, are these little circles. And this is the SAR. which is called the stop and reverse point. And what it does, it's a parabolic move that is calculated off the price itself. So notice, for example, at the beginning of this chart, as prices are going up, the circles are going up, and then they begin to curve faster and faster as the price goes up. That's the parabolic part of it. But also notice that what happens when a correction begins to take place in price, one of the stops is hit, the last stop, and that reverses the circles from below the price to above the price, which says this is not a time to be long or owning this particular security, or in this case, Bitcoin. That lasted for approximately 7 days, and then we were stopped out of the short trade, and again the long SARs develop. A 3-day pause, and then they developed again. You'll notice by looking at this chart how accurate it is for a majority of the movement of price. There will be brief times where you might be knocked out of a position, so you cannot use this blindly. But it is a very powerful tool. I've been saying from the top, Hyperwave got us out very early, and we haven't gone into the details of how you use Hyperwave or timing various phases. But just take a look at what this was telling you. You would have gotten out on this candle right here, which is around 17,000. And then the SARs kept you short all the way down to 14,000. And then you could be back in on this run up, and then it stopped you out again of the long position and has been short ever since. And now the price is pulling down away from it. It came close 2 days ago and 3 days ago to penetrating up into the circles, but it never hit it, and now we're dropping. Another reason for my tweet this morning. Also notice that if we close anywhere down in this level, at 10,250 right now, that this will be the lowest close since the beginning of the downtrend from close to 20,000. We're not there yet. We won't be there until tonight. But for right now, this is looking like it wants to go much lower, much more quickly. I'm going to bring up one other tool very quickly that many others use, which is simply the stochastic. You can use either a stochastic RSI, or you can use just stochastics. Down below now, you see the stochastic RSI indicating a downtrend. The shorter term stochastic line is just broken through the longer term line, and we're doing it from a fairly high level. We did it back here during this peak. We did it at the beginning of the drop from this peak, and it has a long way to fall to get into an oversold level. Just as I pointed out that RSI was developed by a gentleman by the name of Wells Wilder Jr., stochastics were originated back in the 1950s by Dr. George Lane, and it's also often called Lane stochastics. Most people have dropped the Lane, but I like to always go back and see who came up with these systems and what their background was. Lane ran a school for teaching technical analysis back in the 1950s, He was the president of a company, an LLC called Investment Education Incorporated in Watseka, Illinois, and he taught technical analysis of all kinds. Most people don't realize that back in the 1950s, there were also a lot of practitioners of stochastics. So what I'm going to do now is stop the screen share, go back to full view, and let me just briefly summarize what we've looked at. First of all, this is a very important day for the price of cryptocurrencies and Bitcoin. We are breaking away from support, and the other technical indicators, many others that we didn't talk about, are pointing in the same direction, and that is lower at this point. We also took a quick look at Hyperwave. We looked at another example, Otis Elevator. We looked at International Harvester yesterday. And we see that there's a similarity between all the movements of things that get into hyperwaves. Remember again that we believe, and I've got a lot of evidence for the fact that Bitcoin is in a hyperwave. I'm not ready to say what that's going to mean for the future, other than I wouldn't get too excited by the fact we are dropping here. Be the beginning of the next phase that's going to take Bitcoin much, much higher. And we're going to together walk through that as it occurs so that everybody gets my perspective on this very, very powerful tool called Hyperwave. And with that, back to you, Leah.
Thank you everyone for tuning in. This is again Lucid Totality, and until next time.
Great. Bye-bye, everyone.